What's going on, you filthy animals? Gabe here with Review Door again. We are at market close. Let's talk about what happened today. Now, calls in the money expiring 22,744. This is a number we don't care about. Actually, I'm kind of happy that we have sort of pulled back on our call options and our options plays here, guys, because we know that options are hurting us. Now, let's talk about the good news. We have Eternals. Insiders say advanced sales for the movie from Oscar-winning filmmaker Chloe Zhao is estimated to have racked up $2.6 million in its first 24 hours. For number one exhibitor AMC, Eternal reps their largest day one sales so far this year. Eternal's tickets went on sale Monday. If this isn't bullish, well, I don't know what to tell you. And obviously, this is earnings season, so you know what? Every dollar counts. Now, we're going to talk about something here, and this is going to lead to my point of the video, and that is percent turnover. But before we get into that, I want to talk about short interest because this has been recalibrated. I want to show you guys somewhat of a pattern. So what we have here, days to cover. And you see that here highlighted in lime green. And then we have exchange reported short interest. We could zoom in here and we could see that every single time we had the days to cover based on 10 trading days. Once that crossed beneath, AMC saw a move to the upside. Now, way back when, that move was rather dramatic considering where it was trading at. But then we see that same move happen again. We have elevated days to cover. It crosses below estimated short interest. We had a run to the upside. We see it one more time. We have days to cover. Crosses below estimated short interest. We had another run up. So what do we have here? We have a convergence here, and we want to continue to see strength with AMC, and we want to see days to cover continue to creep up. Where are we when it comes to days to cover? Well, the volume thus far, volume was 33.24 million, and that is super low, and that's what we want to see, right? We're not getting the 750 million in volume, and that's actually a good thing when we talk about the squeeze play, right? Because less volume and days to cover starts inching higher and higher. Okay, so let's talk about CPI data, because CPI data, there's talks about how inflation affects the economy. If the recent pace of elevated inflation continues, that should push the Federal Reserve to start removing accommodations sooner rather than later, which could hurt stocks and other risk assets, noted Nancy Davis. Okay, so what does all this mean? This means that money managers, those guys, they're going to start pumping. Things are going to start going up, and then you're going to see it fall flat on its face, right? Because this is a ticking time bomb. Too many moving pieces. But let's look at how the Dow performed. Closed up. S&P closed up. NASDAQ closed up. AMC closed up at 3788, closed up 2.89%. Now, let's go to the chart. I have been talking about this area for days. There is so much emphasis on this area. We talked about how this is where the shorts piled in. And this line here, this red, this 3775, this equals war. This is war. And guys, ooh, I'm getting excited. Tits are jacked. Why? Because turnover rate, the percent turnover, 6.48%. That's what we want to see. But we're not done yet. We want that number lower. Now, let's get a definition for this for those who are wondering, hey, Gabe, what the fuck you're talking about? I got a smooth brain ape. I don't follow. I just eat crayons and nanos. Well, we got a definition for you. Percentage turnover measures how often shares change hands. It is a measure of stock liquidity calculated by dividing the total number of shares traded over a period, known as volume, by the average number of shares outstanding for the trading day. The formula is rather simple. Percentage turnover equals volume divided by shares outstanding times 100%. So what does this mean? Now, everyone's cheering and saying, yeah, no one's selling. But you know what, apes? We got some work to do. We need to take more shares off the table, which means we need to buy more. Why? Because, we can look at marquee stocks like Apple, and you know what their turnover rate is? Less than half of 1%. We could go ahead and look at up-and-comers like Lucid. And what do we see here? we see turnover rate less than 1.25%, which means that individuals who own the stock actually value the stock and they have bullish sentiment. So guys, if we really want to see the squeeze, we want to see that turnover rate start going down. And I promise you guys, that happens. Then we go back to Ortex data here, and it's not going to matter. The short interest, we already know it's highly elevated at 17.71%. What we want to see is days to cover continue to climb, because when that number starts coming down, the price starts going up. And that is the pattern and the trend. Again, we want to act like those guys over at Amazon. We talk about this on Twitter. Know what you hold. Well, you know what? Those guys at Amazon, they really know what they fucking hold. Again, less than 0.5% a turnover. It means nobody's really selling. So, you could give yourself a pat on the back for the 6%, but I challenge you to get that number lower. And we buy and we hold and we buy some more apes. Look at, we are going to the promised land. This is going to happen, right? We got blockbusters lined up. And, with CPI, there's a lot of talk of, bottlenecks and chip shortages. But guess what? There's no shortage of movies. In fact, their backlog, they want to reach AMC exhibition halls. They want to make money. We want to go to the moon. This is Gabe. I hope you guys learned something. No bullshit on this channel. Make sure you guys check out our day trading playlist. I'll include that link down in the description. You guys will be better traders after those 19 videos than you have ever been over the past 10 months holding AMC. I'm signing out. Sarcastic Society coming through. Peace.